as to why equity investment from pensions is deteriorating is because the UK equities are not performing relative to their global counterparts. And one of the reasons for that is that actually we've become overregulated and overtaxed. 40 years ago, when Big Bang was launched, the City of London became the most important financial centre across the whole of the world. But in the last 10 years, that has changed, and that's why at Bloomberg a couple of weeks ago, I announced the creation of 4 key working groups to look at a complete reset, sort of Big Bang 2, Mr. Chair. We need to relook at the whole issue of regulation, look at the status of the FCA relative to the PRA and the Bank of England. That's working group 1. Working group 2 is pensions and savings. And we need to consider big picture issues. Why, for example, are we giving tax relief on 300 billion in cash ISAs? How does that help the UK economy? These are the big questions we need to look at. The third working group is SME growth capital. The honourable member referred to why is it that on sort of second, third and fourth phase rounds of fundraising, companies are going elsewhere in the world? The truth is that our markets have become too difficult to raise that additional capital. And then the fourth working group that I've set up, and these will report in about 6 to 9 months' time, is on taxation. We are overtaxed. We enjoy the longest tax code in the world at 24,000 pages, 4 times the combined works of Harry Potter, and nothing like as much fun. So we need to really look at all these issues. And then we need to look at, well, what's the performance of our pension funds? And if you look at the performance of what's one of the biggest pension funds in the world, the local government pension schemes, that I've been very focused on, they are being overcharged substantially by a factor of about 5 of what they should be paying, and they are underperforming. Last year, to the year March 25, Chair, the LGPS produced a great performance, not of 3.3%, and yet paid out over £2 billion in fees. So, frankly, if the active funds cannot perform, if they cannot match the tracker, then why not use a tracker? That's the challenge for the active industry. One of the reasons that the LGPS is underperforming, Chair, is because too much of them are invested in unlisted funds and now invest in what I would call quite woke funds, but that's a whole different issue. These unlisted funds, 20 to 40%, you can't get out of them, you can't properly value them, the fees are much higher, and they are not performing as well. These are the key reasons, Mr. Chair, why the performance is deteriorating. The local government pension schemes, their 10, 20 and 30-year track records, all over 7% in the long term, but in the short term, rapidly deteriorating because of wrong investment decisions, overpaying fees, and we have a market in the UK that is overregulated and overtaxed. And all of these things reduce the incentive to invest. And for many people, this is a world of, it is complicated. But fundamentally, Chair, if the active fund managers overcharge and underperform, then don't be surprised if investors end up going elsewhere, and that might mean overseas. So, Mr. Chair, we need to change the way we look at things, and we need to deregulate sensibly and reduce unnecessarily taxation in order to improve the quantity of pensions invested in UK listed equities. Thank you.